Thank you, Neeraj. Good morning. Happy to be here.
Yep, well, happy to have you. Gautam, should the markets be happy by virtue of the Fed meet yesterday? Does it change the trend which was otherwise looking pretty sketchy, particularly for the broader end of the spectrum?
Well, I don't think so. I think the market is definitely looking a lot more energized, more US and less world equity markets. But I do believe that we have our own positives. Clearly everybody talks about the liquidity. But at the same time, I think given the kind of crazy up moves that we saw in the last couple of months, I think a cleanup was always required. And I think the market went through an absolutely amazing internal correction, because when you look at the headline indices, you feel that nothing has happened, but you actually speak to people on the ground and talk about how the portfolios are doing. I think in general, stocks are down anywhere between 20 to 40%. So the headline indices, the mid cap 100, small cap 100, not so much. The NSE 500 have really not got impacted. So this is a cleanup which was very much needed. We are still in a consolidation phase. I don't think we are out of the woods as yet. And the market is likely to spend more time in a range and not make new highs in a hurry, because the correction started with the small caps, then moved to the mid caps. And now you are seeing some large caps come under pressure. And till the Nifty does not really get past levels of 22,050 on a closing basis, I would want to believe that the chances of a dip towards say 21,500 or maybe even a 21,000 is pretty high. So I don't think this market is running away anytime soon. It is still a very stock specific market, so the index might not do anything special. But given the big damage that you've seen in the small caps, there are some select opportunities that are coming by. So once again, stay away from the large caps because the Nifty is looking a little top heavy, but the small cap opportunities remain.
Interesting, Gautam, because everyone, this is also Samina joining in, everyone, at least in the fund space, has been trying to rebalance portfolios towards a larger cap space, only because, one, they haven't performed in a big way, and secondly, because the risk reward may potentially be favorable. But great point, there is probably more opportunity in the small cap space. A couple of months ago, I read one of your interviews that said that 22,300 was your working target, and 20,900 should be a good sort of support for the markets. Now I want to pull out sectors and talk about how you feel about them. With the way the dollar index has been moving with the Fed's rate decision, it seems like metals are on a bit of a sideline, at least in the last few days of trade. Of course, that's the negative. The positive clearly being that China stimulus could be helping commodity prices higher. On the metal index and on metal stocks, are you constructive on anything here?
See, firstly, don't get me wrong. I think from a medium-term, long-term perspective, we remain a big bull. And I think all of India's positives remain intact. And I think the liquidity, India's outperformance in the world, all of it will play out and will take the markets higher. However, from a near-term perspective, I think there are challenges. And that's probably the reason I feel that there could be some more large cap correction. I mean, I haven't seen in 20 years that the Nifty has lost 2% and the small caps have lost 12%. I mean, on an index level, forget about individual stocks. So it's a very unique internal rotational correction that we've gone through. Having said that, I think this has become a very stock and sector specific market, and metals are right on top of our list. I think we love the entire space. We think that metals could be one of the best performing sectors this year, along with pharma and stocks like Nalco, SAIL, JSW Steel, JSPL, Tata Steel. They all look good to us from a risk reward perspective. Not so much other sectors, real estate, auto, capital goods, which I think have run their course for the time being and need to go through a time correction. So our top two picks right now are metals and pharma. Those are the spaces where one can hide. And apart from these two spaces, the two other big stocks that we like for this year, and we've maintained this for a while now, is SBI and Reliance. And I think both these stocks could really be the trades of the year.
Right.
Wow. Sorry, Gautam, did you say Reliance and SBI as the stocks of the year?
Yes, I think we've been maintaining this for a while. SBI, I do see it gradually move to four figures. I think that's a big move if it were to play out. And Reliance is coming out of almost 18 months of consolidation. So I do see a 15% move there. And when you see some of these big stocks seeing such kind of moves, I just feel that the Nifty will stay protected. So you will see phases where there will be a lot of fear, there will be pessimism on the screen, but some of these stocks will bail out the market from time to time.
That's interesting. I remember when ITC used to be at circa 200 and consolidating for such a long time, is when Gautam Shah had come and said that there is probably a change in trend being seen. Then ITC had a phenomenal run. I wonder if kind of Reliance is doing that, because 18 months of consolidation is a very long consolidation. And maybe if you're bullish on the Nifty, at some point of time, Reliance does need to participate. Actually, in that same vein, Gautam, more than Reliance, HDFC Bank needs to participate, right? Every fundamental voice out there. Today, there's a Bernstein note which says 5 charts, and we say that HDFC Bank is the best value that ever been, something like that. Now, but everybody's found value in HDFC Bank at 1500, 1475, 1450, and the stock just doesn't budge. When does it move on the upside if it does?
Yeah, I think all tricks of the trade have been used on HDFC Bank to move, and I think has really worked so far. And I think it's just going to stay in a range because, I think you've got into a situation where anything below 1400 and people will find great value and there will be a lot of buying interest. And anything over 1500, 1550, there's going to be a lot of selling interest because just too many people are overly committed into one stock. And that's led to underperformance for a lot of people in the market, sadly. So I think HDFC pretty much is going to be in a range. 1380 on the downside, 1550 on the upside. And one does not need to overanalyze because if you look at the ratio chart, which is HDFC divided by the Nifty or the Bank Nifty, the underperformance continues. I think the better opportunity is probably in ICICI Bank, which I think could do much better. But banks, I think, are in a sort of a tricky space because 46,000 on the Bank Nifty is very important. If that number were to break, you could actually see a downtick on the Bank Nifty. So honestly, I'm just looking at SBI and some of the other top 2 PSU bank stocks, which is Canara and BOB. Apart from that, I'm staying away from banks because I don't think this is a market where you can be in high beta.
Gautam, until a few months ago, at the start of this year, you were fairly constructive on the IT pack. Of course, news flow like Accenture reviewing its guidance downward, Cognizant not very positive on the outlook, doesn't help the sector, right? Of course, a stronger dollar is one good news. Across the IT pack, will you be constructive even today? And if yes, what are your 3 top stocks in the IT stocks sector that you would recommend at this stage?
Yeah, I think you are absolutely right. I think for 3 quarters now, we've been very bullish on the IT space. In fact, the IT index got very close to that level of 38,500, 39,000, which was the lifetime high. And from there, we've seen this correction. The last 1 week hasn't looked good. The outperformance has gone to some extent, and this news flow today morning is not helping. So I think even the IT space has got into a bit of a hibernation mode. But still, from a medium-term perspective, I would be a buyer. But I would stay with the big boys. I still believe that TCS offers great value at these prices. There is not much to lose, and this dip today is a good opportunity for investment longs, followed by HCL Tech and Wipro. So I would stay with these 3 big names, and I would actually stay away from the mid-cap space where I think there will be greater concerns because they were extremely overvalued. They had run up substantially over the last many months. So stay with the 3 big boys. I think that clearly would be the recommendation from an investment point of view.
Right. Gautam, thanks for that. And also Pharma, that was the other sector that you alluded to at the start of our conversation. That's a good space to hide, you said. It's been on a solid footing for whatever it's worth. How much more upside for the pharma stocks? And again, if anyone's looking to enter the pharma sector at this stage, at these prices, where would they buy and what should they buy?
I think the best is yet to come. I think pharma has been absolutely clean and smooth. We have seen consistently higher highs all along. And it is only going to get better and better because our working target is about 19,600 short term and about 21,500 on the index, more medium term to long term. So it clearly has been the place to hide. And I see continuous trend there, led by Sun Pharma, which is our favorite, and we've recommended it multiple times. Cipla, Dr. Reddy's. So I would stay with these 3 big names for the time being, and I would avoid the smaller or the mid-cap pharma companies where I think there is no great risk reward to be buying fresh at these levels. At a 22,000 index, I want to be in companies, which are super solid on the fundamental side, which are exhibiting relative strength, and which have the ability to sustain in case a 5% drop on the Nifty comes, which I think is a possibility. So given that, the three names that I mentioned and the entire pharma space in general look very positive.
Okay. Well, Gautam, just wondering, just dwelling on that point a bit. So US generic companies, just splitting hairs fundamentally, the US generics, the Sun Pharmas, Reddy's of the world have done very well in 2023. But some of the others, the CDMO companies, Divi's, Laurus, Granules, etc. haven't. Some of the diagnostic names just haven't. So is it only the US generics which have had a good 2023 looking strong? Or is there some buying that could come into some of the underperformers as well?
No, I think this is a market where you stay away from underperformers. Winners continue to win, losers continue to underperform. And we've had some great examples in the form of HDFC, Asian Paints, Bajaj Finance, and, a long list of stocks, which have not done well. Divi's Lab and Laurus Lab in the same breath, which were the darlings of the market in 2020 and 2021. So I think I'll just stay with the big boys, and I like to stay with these US generic companies, which are much better. Diagnostic, again, I was very hopeful sometime back that they could come back, but they seem to have lost their way, apart from Apollo Hospital, which continues to be on top of our list. But the other names, Lal Path Labs, Metropolis, I'm not too sure. I don't think there's an opportunity there.
Fair call. Stay away from the losers, if you will. So that's the key point. Gautam, other thing that has done really well, and maybe post Fed 2 is gold. I mean, maybe not as well as Bitcoin, but has done well. What's the sense here for the rest of the calendar year?
Well, Neeraj, firstly, thanks for pointing out ITC. Yes, at 200 levels, we did put out a very bold call on ITC that it could be a doubler. It happened. Thereafter, we made the point on your very channel that Coal India could do what ITC did, and that pretty much happened. Touch wood for us, it went off really well. And about 6 to 8 months back, at levels of $1,900 on gold, we said that it could be the trade of 2024. It could actually beat benchmark returns of equity markets this year. So far, the going has been great. Gold has sustained beautifully above levels of 2,050. And I do see a move towards $2,500 to $2,700 on gold is coming. Now, that might be tough in terms of returns for the equity markets. And given the Fed stance, and if you look at the last 20 years, whenever Fed has cut rates, gold has seen its best move. So I think a mega trend has already developed in gold and even silver. I mean, look at the move in silver in the last 10 days. I do see silver appreciating 15-20% to levels of $28 to $28.50. So gold and silver, one should be topped up. Use every small dip to buy, and it could be as high as 15% of your individual portfolios.
One quick question: constructive on any of the Adani Group names?
Not really. As I said, I want to stay away from high beta. I think we've played high beta in the last 6 months and we've all enjoyed the rally. But right now, I don't think I want to stay with high beta because I feel this is an election year. There's too much on the table and there are much better, solid stock-specific opportunities in other spaces of the market. Yes, a few Adani Group stocks like an Adani Port might continue to do well. But at these levels, I'm not willing to, park capital there.